Thank you everyone for attending the Annual County Budget Commission hearing PowerPoints. Before we begin the presentation, I'd like to thank a few people who contributed significantly in preparing both the content of these slides as well as the oversight of the messaging that we are providing to you here today. First and foremost, Tammy Most and Kristen Sinatra played a pretty significant role in developing the content that we're going to be talking about today. And then our review group consisted of myself, Pam McMahon, Ron Leidy, and Kate Jacob. And we vetted the PowerPoint slides and made some adjustments and tweaks to make it user-friendly to all parties. The goals of this presentation involve four basic components. It is, above all other things, to inform you, the participants in the Budget Commission hearings, and give you as much information as possible so that you can adequately prepare for your hearing. The second is to improve dialogue between the Budget Commission members and our staff and the entities who are bringing their budgets for our review. The third component is to set expectations so that you are aware of what to expect when you come for a Budget Commission hearing. And last but not least is to reduce the stress that you're under. We appreciate and understand, and we kind of joke amongst ourselves that attending a Budget Commission hearing is the equivalent of getting a root canal. So we certainly don't want to make this any more painful than absolutely necessary. So we would like to create a dialogue which accommodates that. This video is the byproduct of a live webinar that we conducted. I'd like to thank Cole for putting together the video of this particular presentation, which has been widely accepted by previous people who have experienced Cole's work. So with that, let's get started with the PowerPoint. The Budget Commission has several responsibilities. First and foremost, it is our responsibility to annually review tax budgets provided by taxing entities unless waived by law. And in Geauga County, we do not waive tax budget presentations of all taxing authorities within the county, and to determine if tax levies are being properly authorized and allocated to counties, cities, villages, townships, libraries, parks, fire districts, and a whole variety of other taxing authorities. Secondarily, the Budget Commission approves and distributes the local government funding as well as the library funding. And in addition to that, our role is to ensure that levy monies are collected and properly spent, and that carryover balances of entities are being monitored and are considered reasonable. First question is, what makes up the Budget Commission and who makes up that particular entity? Ohio Revised Code 5705.27 defines that the Budget Commission composition shall be made up of the county prosecutor, the county treasurer, and then myself, the county auditor. We are also authorized to assign representatives to serve in our stead, but statutorily, I serve as the secretary of the County Budget Commission. The duties and authority of the Budget Commission are varied. First and foremost, we are minimally required to meet the first Monday in February and the first Monday in August. And we are statutorily bound to complete our work by September 1 of each year. Budgets that are not waived are due to the county auditor pursuant to Ohio Revised Code 5705.30, and they are due by July 20th of each year, unless you're a school district. If you're a school district, your date is January 20th because your calendar year runs different than the county's budget year. Second, our duties include the distribution of the undivided local government fund as well as the library fund. And this is based on one of either two statutes. One is the statutory method of distribution, which is defined by a specific law, or what's called an alternate formula method. And let's talk about each of those. The statutory method is defined in Ohio Revised Code 5747.51 and 5747.52. It has been deemed by many parties who participate in the statutory formula to lack transparency and be very controversial. Basically, the statute says that the Budget Commission has the authority to determine at will on an annual basis and based on need how the undivided local government fund is distributed. You can imagine that puts all of the bias and emphasis on the Budget Commission and less on some sort of a agreed upon approach. Contrary to the statutory formula is an alternate formula, which is defined in Ohio Revised Code 5747.53. And that is a locally adopted formula. It is considered much more transparent because it requires a majority vote of parties that are of interest. So we will go through a little bit about the history of our locally adopted formula and how it's evolved over time. So first, you can see that originally the formula was created back in 1981. And then shortly thereafter, in 1989, it was amended to include 38% of the undivided local government going to the county, $15,000 floor going to each of the townships and municipalities, $1 per capita based on the census to park districts. Lastly, the excess was distributed based on a per capita basis to townships and municipalities. As you can see, since 1981, in little over 8 years, they determined that there was a need to modify the original formula. That formula has remained intact through today. So we've got over 30 years of that old formula from 1989 being used. The Budget Commission has recently met and reviewed that formula, and we have determined that it's probably well overdue for a revamp and a reconsideration. Many things have changed in local government in Geauga County since 1989. So we're proposing a change to the old 1989 formula for effective tax year 2022. We're not proposing a change to the county's portion. It will remain at 38%. We are not recommending a change to the floor for the Geauga townships and municipalities that are wholly contained in the county. We are proposing, though, to eliminate the floor to entities, townships, and villages and municipalities that are not wholly in the county. And that would be specifically for Hunting Valley, which has just a little bit over 100 people in Geauga County. The logic behind removing Hunting Valley from the equation is we reached out to Cuyahoga County and asked them how they distributed their undivided local government, specifically to Hunting Valley. And it turns out they have a rather elaborate formula that they use, which is very much based on need. It turns out that while the majority of Hunting Valley is in Cuyahoga County, they only get about $9,000 a year from Cuyahoga County and undivided local government, where we were giving them $15,000 as a floor and then $1 for every person in their population. So you can see that Geauga was giving a disproportionate amount of its money to a very small entity that only has a fraction of its population in the county. The next component is we're proposing that any township or municipality that is not wholly located in the county would receive a distribution of just $1 per capita of the population that resides within the boundaries of the county. So in the case of Hunting Valley, they would receive $1 per person that is located in Geauga, which would be a little over $100. And then the excess of all the money would be distributed to townships and municipalities based on the latest census results. So you can see we have removed park districts from the equation. The logic behind that is since 1989, park districts have evolved considerably and they have a wide variety of sources of revenue. As you probably know, both 1545 and 511 park districts can place on the ballot a levy for taxes to the populace in which they serve. And all of them have either done that or attempted to do that in recent years. So we believe the best source of information is at the root level. The townships and municipalities that have park districts that wish to fund them should take advantage of the additional money they're being granted by the undivided local government distribution formula change to provide that extra revenue, if they so choose to those township or municipality parks. If they choose not to, then they can encourage those local parks to put levies on the ballot. In addition to the aforementioned duties and authority, it is also the duty of the Budget Commission to annually set your tax rates based on your local government area on all levies, and it's also based on your budget and your submission. Now that's provided that it's a non-waived budget, which again, all budgets in Geauga County are non-waived. We do not waive the budget hearings. We are to do that by determining the need for your revenue. We look at both inside and outside the 10 mil limitation. We test reasonableness of your budget submission, and by that we're going to look at both the accuracy and completeness of your budget submission as well as a variety of other things. And then our role is to provide an independent check and balance for the taxpayer. We are also tasked with the duty to approve and issue an amended certificate of estimated resources for all entities. And we'll talk in greater detail about that in a few minutes. And then of course, we are to review and approve your annual budget submission. And again, unless waived, and the statute that permits the waiving of a tax budget hearing is 5705.281, unless waived, our duty is to pass or deny the passing of a tax budget on an annual basis. As all of us are aware, there are built-in checks and balances in government, and the Budget Commission is no exception to that. There are two fundamental laws that govern the oversight of the Budget Commission. The first law is 5705.341. That law permits an individual to raise issues relating to the fixing of the uniform tax rates. If any person who is an affected party in that they pay real public utility or tangible personal property tax within an entity has issue with the fixing of the uniform tax rate, they can file a claim pursuant to 5705.341, and that person must deposit $500 to cover the cost. If they're victorious in their claim, that $500 cost is returned to them as a refund. Anybody else who wishes to file a claim against the Budget Commission's actions relating to anything that they believe they are dissatisfied with does so under 5705.37. And the eligible parties to file this lawsuit are any taxing authority of a subdivision, which would include libraries, nonprofits, or parks. In the event that the filing of that particular exception or that challenge to a decision of the Budget Commission under this statute is decided upon, that board that decides that is the Board of Tax Appeals, and the decision of that board simply is substituted for the actions of the Budget Commission. So let's talk about a few things that you would probably want to know in detail about things you will receive pre-hearing of your budget hearing. So prior to coming in for the hearing, we perform a series of tests on your submission, we being the auditor's office. The first test we perform is on your Schedule A and Schedule B submissions. So the things we look for are both accuracy and completeness of your submission, and then of course, if you look at your actual submission, your Schedule A document is a representation of how you are allocating your inside millage. So in this particular example, all of the 3 mills inside this particular entity is being allocated to the general fund. In some cases, you may allocate all or a part of that inside millage to, for example, your road and bridge fund. And you can see that that's identified in your schedule. You prepare this document. Please be sure that that information is accurate, because that is telling the Budget Commission how to distribute the depositing of your inside millage. And then, of course, your Schedule B identifies all of your revenue of outside the 10 mil limitation levies. So in the case of this particular entity, there are quite a few. You can see that there are road and bridge levies, there are police district levies, there are fire levies, and there's a general bond retirement levy, which went to a construction of a fire station. We identify both the levy, the fund in which the levy is deposited into, the description of the particular levy, and of course the millage and then the money that it derives. The budget format is defined pursuant to Ohio Revised Code 5705.29. It is pretty straightforward. It requires a 2-year retrospective listing of your actual expenditures and revenues. It requires the current year of your revenues and expenditures through the term of your submission. And then last but not least is, of course, your 1-year forward-looking budget. These statutes are well defined in 5705.29, A1 through A5. You should also note that there is a specific carve-out provision of how the Budget Commission is to interpret a reserve fund allocation. And that carve-out interpretation is defined under 5705.29F. If you are using UAN or other computer-generated software to do your budget, we appreciate that. If you are not using a computer-generated budget scheme of some sort, you probably are going to be using something like Excel. We don't encourage Excel. We will accept your budget in Excel format, but the difficulty we have is we cannot see the calculation in a cell that you submit to us in Excel. So we can't determine whether your math was properly done. We would have to manually add up your numbers to determine that. So it is quite time consuming. We strongly recommend some sort of an accounting system that automatically generates a budget system. And then, of course, I want to mention that the level and detail of your budget submission does not have to match that level of detail in your annual appropriation measure. And just to refresh everyone's memory, the level of detail of your annual appropriation measure is the level of detail that you will be audited against. The level of detail of your budget submission has nothing to do with the level of detail that you're audited against. Therefore, your budget submission could be more detailed or less detailed than your appropriation measure. So this is a typical example of a budget submission, and you can see its standard forms include starting with fund balances of each year. And in this case, this was from last year. So you can see that 2018 and 2019 are identified as beginning balances. The current year is identified as 2020, which would have been last year. And then, of course, the forward-looking budget year is 2021. And again, to point out, if you have any reserve funds allocated under Section F of the Ohio Revised Code, I encourage you to take heed in what the requirements are of the Budget Commission to consider the balances in those reserve funds. I will note for the record that the Commission shall consider any amount in a reserve fund account that it determines to be unreasonable as unencumbered and as revenue for the purposes of Section 5747.51. So what I recommend is when you come to us with a reserve fund that you have documentation that supports the amount of money that is in that reserve fund. You can't just place money in there and just say, well, nobody can touch it because it's a reserve fund. That's not the case. You need to justify what money you're putting in the reserve fund pursuant to the law. We also test the beginning balances of each year of your submission, and we compare that test to your Certificate of Estimated Resources. So the example here is an entity has submitted a first sheet, which is their certificate. We provided that to them. That particular first sheet gives them an unencumbered beginning balance. In this case, it was for January 1 of 2021. The amount of that unencumbered balance was $49,757.12. And then if you look at their proposed budget submission, that particular unencumbered balance number should match the beginning balance for 2021. And in this case, it does not. The beginning balance on their budget submission was $81,257.12. So obviously there's a discrepancy there. So we would issue you a document that says that your unencumbered beginning balance does not match your unencumbered beginning balance of your budget submission, and we're going to ask you to remedy that prior to your budget hearing. So in this particular entity's case, they resubmitted their budget by making whatever adjustments they needed to make. And you can see in this case, the unencumbered balance of $49,757.12 exactly matches the unencumbered balance on their budget sheet. We also test your budget revenues as compared to your county's Schedule B submission. So we prepare our Schedule B, which is also known as Form GCA-001E, and E stands for estimate. So we provide you Schedule B prior to you submitting your budget, and when you submit your budget, we compare your revenue that you've put on your budget documents with that of the Schedule B revenue that we provided you. So here's an example of Schedule B. You can see that in this particular case, for this entity, we have indicated that 1.5 mils of inside money is being placed in the general fund. Incidentally, it was shifted there under a resolution by the Board of Trustees. That amount on the right-hand side is provided to you both at 100% collection, 98% collection, and 95% collection. And it's important for you to note what the county treasurer is recommending that you use for your anticipated collection rate. And you would use the appropriate column based on his recommendation. So in this case, for last year, we recommended 95% collection. So that amount of money, 1.5 mils inside to the general fund, is represented as $826,811. If you look at the prepared budget for this particular entity, what we do to test this number to see if your budget accurately represents your estimated revenue is we pull your real estate money under your budget revenue amount, and we add in your property tax allocation, which of course is rollback. And we take those two numbers, we add them together, and if they should match your collection rate at the percentage that we have indicated. In this case, the $729,000 and the $97,000 add up to $826,000 and some change, and that matches the submission provided to us, and it aligns with the certificate. We also test a variety of transfers in and out of all of the funds that you submit. We test them both from a transfer perspective as well as an advance perspective. If you are a non-UAN entity, so you're preparing your budget outside of a computer-generated or a UAN world, we ask that you provide the transfer in and out information in spreadsheet form, identifying both the sources of your transfers or advances as well as the targets. And what we look for is your transfers in should equal your transfers out, just as your advances in should equal your advances out. So we need to know where the money is coming out of and where it's going into, and they should resolve themselves to be equal to zero when you take the two in totality. So here's an example from an entity that submitted a budget which had in the general fund a transfer out of $70,000. So it's identified on the budget sheet after the expenditures as a use category, transfer out. We then looked at the road and bridge fund, and we looked under its other sources categories, and we see that there's a transfer in of $50,000 So we transferred out $70,000 of the general fund. We transferred in $50,000 to the road and bridge fund. And then when we look at the cemetery fund, we found that they also transferred in $20,000. So simple math tells us that $70,000 was transferred out. The road and bridge fund received $50,000 of it, and the cemetery fund received $20,000. 50 plus 20 is 70. Everything matched. We are copacetic. We also test your voted and unvoted debts. We do that in conjunction with testing your amortization schedule. So please be sure to provide us with both your voted and unvoted debt listing, as well as your amortization schedule. This is an example of a voted or unvoted debt schedule. You can see that there are two for this particular entity. One is for a fire station improvement and one is for a police station, probably both for construction. They're bond notes. And then they provided us the refunding of those bonds and the amortization schedule that accompanies it. So these are vital pieces of information that we need to have in order for us to properly put the revenue to satisfy these debts in the appropriate fund, which draws that debt money out of. We also test for proper fund creation and utilization of those funds. The most important ones that we've seen of late are, of course, with COVID money being received by all entities, we were advised to open unique funds to house the COVID money. If you did not do that, we will trigger that as an event and we will provide you with a notice that you should be using an independent fund to house your COVID money. In addition to that, a few years ago, the engineer's office put some permissive taxes on license plate fees. And in doing so, many of you mistakenly, the first few years or the first year or so, put those permissive monies into either the gas tax fund or some other licensure fund instead of opening a unique fund for the permissive license plate tax. So we test for that, and if we see you're not using a proper fund, we will return your budget to you and ask you to correct it. So this is a classic example of an entity's use of a permissive motor vehicle tax fund. It is a special revenue fund, and you can see that by the detail below that it originated in 2018 and it's slowly grown from there. We also test levies. So we test whether your levies are current, whether you have a current item on the ballot that you've included in your budget. And the note that I will make of this is if you have a new levy that you're placing on the ballot, and it is not yet passed, you cannot assume the revenue that that levy will produce. Likewise, if you have a levy that is expiring and it has expired as of a particular budget year submission and you are planning on renewing it, but it hasn't completed the ballot yet, it hasn't been approved by the ballot, you cannot assume that revenue is yours, even though it was yours prior to it expiring. So that does make your budgeting a bit more difficult, but I recommend that you keep that in mind and you apply that appropriately. Okay, so for non-waived hearings, these are the documents you should expect to see when you come to the hearing. If you're like me, the first time you went to a budget hearing, you were given a bunch of documents and you probably had no idea what to do with them. You were being asked questions and numbers were being thrown at you. So we thought it would be beneficial to walk through what you should expect to see. So first, you're going to get a series of instructions and some letters prior to the hearing, which is going to set the tone, if you will, for what to expect at your hearing, what some of the parameters are going to be that we're going to test against. And it's going to provide you, in addition to that, your Schedule B to be used to submit your budget, and then a feedback form if we determine that something that you provided us is not accurate. So this is a letter, for example, that we sent out earlier this spring to an entity which identified that a tax budget cycle is beginning. We identify in the first paragraph to use the 95% figure. We also identify what kind of data we need for your budget hearing and what the date of it is, and to be sure to not amend your budget once you submit, unless asked to do so. And then lastly, we provide you with a copy of your budget hearing sheet a week prior and what to expect when you walk in to the hearing. We also strongly recommend that you advise your legislative authority to attend budget hearings. Included with what we send you is Schedule B, which of course, as I mentioned earlier, is the county's form GCA-001E. This tells you your revenue, and it tells you your revenue by fund. So if you would, looking at the particular entity, some very valuable data is presented to you. It tells you the tax year that we are providing this schedule to you for and the collection period that you will receive the money. So in this case, this was from tax year 2020, and you're receiving it in 2021. We also give you your total value of the real property contained within your taxing authority. So this $303 million number that you see at the top of this form represents all of the agricultural, other, and public utilities property located within this particular township. We then, of course, break it out for you by those three components, and we break it out for you by distribution, both in the form of inside distribution, percent allocation, and then, of course, outside the 10 mil distribution and its allocation by percentage. So again, you will match up a particular fund with a particular source of revenue with a particular percent yield that you should be expected to receive. And that again comes from the county treasurer. Lastly, we give you the total mills that you are collecting from your taxpayer. And then we give you a total of your real values, both at 100% level, the 98% level, and the 95% level. And this is of the revenue collected in total. Also, some supplementary letters will be sent to you prior to the hearing. If there is a change, for example, made from the first notice of letter, we will provide that to you. In this case, this letter has indicated that we have changed what we're recommending you use for a collection rate. That is a result of the collection experience that the Treasurer's Office saw for the preceding year. And while we were previously recommending a 95% collection, the county treasurer has recommended that we change to a 98% collection to give a more accurate representation of revenue. And again, we establish the date for the hearings to be had, and then we strongly encourage trustees, department heads, council, or commissioners, if it's in the case of a board-driven organization, attend these particular meetings. If an anomaly was discovered, you would have received a document that looks like this. And in this case, we identify in the middle of the page the types of things that we discovered that were unusual or an error. So in this case, we found there was a discrepancy with the local government fund on the budget submission, that it was underestimated. And we also did not have an amortization schedule for a particular debt service. So we give you an opportunity to submit those prior to the hearing. And this is just to prevent having to table the hearing of your budget so that you can submit these documents and come back to the Budget Commission. The documents that you're going to see when you're sitting at the table at the hearing, these documents will come to you rather quickly. So let's talk about what they include. They include instructions, letters, Schedule B, and feedback form. I guess the important thing to note is no local government distribution can be made to an entity if they submit their budget after July 20th. That is a law, that's a statute. So Ohio Revised Code 5705.30 clearly states that it is a hard stop, that if you do not submit your budget by July 20th, or if you're a school January 20th, you are precluded from receiving local government fund distribution. You can, though, however, receive it if you appeal this to the tax commissioner. So this is the Ohio Revised Code. It states down below, this is a hard stop, and the only overriding authority is the commissioner. In the event that you fall into that category, you should heed this notice. Revenue requests and revenue certification forms are also documents that you're going to see and we're going to talk about in detail. You're going to submit to us your budget documents, and in those documents, you're basically requesting revenue. And then, of course, that revenue that you're requesting must align with what we're certifying. So this establishes, in addition, what your local government fund distribution amount is, using the alternative formula in Geauga County. We also have to include library fund distribution if you're a park, and then we also provide you with total millage on this document. So this is what that form looks like at your budget hearing. And you can see it's got a lot of data going on, and if you're seeing it for the first time at a hearing, the odds are you will miss many of the nuances that are included on this sheet. But we provide you by fund type, listed on the left-hand side, monies that you are asking for or requesting, and then monies that we are providing to you under certification. So in this case, in the general fund, the requester was asking for $368,548.90. We certified $338,970.74. And then we do provide you with some detail as to why that is. We give you our math of how we've derived that number and what your beginning and ending balances will be. And then we tell you why we believe there's a discrepancy from what you requested to what we are certifying. In this case, there was a discrepancy between homestead exemption that was duplicated, so you had excess revenue indicated. We also found that the undivided local government needed to be reduced by 5% because of the collection ratio. At the bottom of this sheet, we give you, based on fund, the total amount of millage that you're collecting for a given period of time. So that's useful to be able to tell your taxpayers what each of your funds are drawing from both inside millage and outside millage. We will also give you at the budget hearing your first certificate of estimated resources. Among other things, this is what you will use to determine compensation for certain elected officials. So if you're a township, for example, there are stair-stepped pay scales based on your budget. A lot of people ask, well, the Ohio Revised Code said I'm to pay an elected official X number of dollars if my budget is this amount of money. Where do I get that budget number? The Certificate of Estimated Resources is the document that you get your budget number. It's your available money that you could spend. It's not necessarily the amount of money that you've appropriated or you're going to spend, but that's the number you use to determine compensation. This is an example of that document. It's broken out by fund, and then of course we give you what you've told us your unencumbered balance will be at the beginning of the year. We provide you the taxes that you will collect as far as revenue is concerned. If you have any other sources of revenue, for example, undivided local government, rents, any other things that you've identified in your budget, we've identified it here. And then we give you a total by fund and then a total for your entire entity. So if somebody were to ask me on this particular year, what is the budget for Auburn Township? I would tell them it is $4.463 million. And that would be the number that I would use to determine compensation for trustees. The second page of this document goes into more detail. You can see that for the general fund, we again identify your beginning balance, the taxes you collect through property tax, and then the breakout of the other category. So there's a homestead rollback amount that we provide to you. There's an other category, and then the other undivided local government, and then the total. We do the same thing for special revenue funds, provide the exact same set of data, and then lastly, we provide it for your debt service funds. The important thing that I ask you to do is when you receive this document, oftentimes we just assume that everyone does things correctly. I have had cases where spreadsheets, are only as good as the person who programs them. So when you get this document, what I encourage you to do is to compare the front sheet to the detail sheet. Compare the first page to the second page. Make sure that the beginning balances are identical. Make sure that the tax allocation is the same as the tax allocation on the detail. Make sure your other sources of revenue add up and equal the number of other sources that we've identified. And most importantly, make sure your totals are equal on both pages. If there's a discrepancy, please immediately contact our office as something has gone awry in the spreadsheet and we're going to need to check the formulas. The other thing you will receive and see being used at the Budget Commission hearing is a spreadsheet of historical balances, revenue, and expenditures. We use this for a variety of things. It's a kind of a busy spreadsheet. There are a series of numbers designated by fund. They go back many, many years. In this case, it goes back 10 years. We look at trends. We look at estimates versus actual, and we do some rough calculations based on the anomalies we are seeing. So let's just point out a couple of things that trigger questions by the Budget Commission when we observe certain things that happen with these spreadsheets. So let's look at what happened in this particular entity on this particular fund in 2015 and 2016. You'll see a red arrow from the bottom of 2015 to the top of 2016. What that's indicating is a potential anomaly. You'll see for all previous years, the actual ending balance should be the same as the actual beginning balance of the next year. But in this particular case, the actual ending balance in the general fund in 2015 was $578,000 and some change. And the beginning balance of 2016 was $68,000 and some change. So we're seeing $500,000 changing over the course of overnight, over the course of 1 minute from December 31st to January 1st. So this is going to raise questions. This is going to ask the Budget Commission to dig and find out what happened. One possible explanation of this is there was an audit and there was an adjustment made to the books for some reason, and then that should be footnoted in your budget submission so that you can relieve the questions that are asked. We also look at the comparison of what you estimated your ending balance will be to what your actual ending balances are. So the numbers in blue are your estimated ending balances, and the items in black are your actual ending balances. So you can see that from 2017, 2018, and 2019, there was a fairly significant variance between the estimated ending balance and the actual ending balance. In the case of 2017, the actual ending balance was over $100,000 less than what you estimated. The next year, it was almost $300,000 higher. Likewise, in 2019, it was well over $300,000 higher. You have to be careful that you don't come to quick decisions. There are many explanations that can be used to explain why these anomalies happen, but it's important that you look at these numbers and think about what occurred during these times and what caused your estimate to be so different from your actual performance. So let's walk through a couple of examples in 2019. If you look at the numbers that 2019 alone represent, the estimated beginning balance was $156,000. But that wasn't the actual beginning balance. The actual beginning balance was almost $400,000. So you're looking at about $250,000 of additional money in your beginning balance alone. So that automatically justifies an ending balance discrepancy of about $250,000. You have to be aware of what's going on throughout the entire year to be able to logically explain to people asking questions on a moment's notice that immediately you can adjust $250,000 out of that discrepancy. But there's also a discrepancy with your actual revenue versus your anticipated revenue. So your estimated revenue, which was certified by the Budget Commission, was $550,000, but your actual revenue far exceeded that. Now, you have no control over that. Actual received revenue is what the taxpayers are actually paying and collecting. There could be delinquencies that are brought up to current. There could be new construction that changes that number. We could have given you a very low estimate of collection rate, and we actually experienced a very high collection rate. So we could have advised you use 95%, but we collected 105%. So that is not something that you need to explain. I believe that is something we need to account for. So there's another $130,000 of discrepancy that justifies why your actual ending balance is so far awry from your estimated ending balance. You probably, though, have the most ability to describe why your actual expenditures differed from your estimated expenditures. You know what projects didn't happen and what projects were added at the last minute that were outside of your normal budget. Have those at the tip of your tongue, explain those, and I think you will resolve the questions that are asked. Don't panic, don't get tense, and don't worry about the questioning. You know your model better than we do. Be calm and answer the questions. Please provide justification for variances in revenue and expenses. Identify business anomalies. So in the case of revenue variances, hey, you may have gotten a ton of COVID money, which wasn't anticipated in a budget. That money was deposited somewhere. That's revenue. You're not liable for that variance. That variance just occurred, but you have to explain that. We don't necessarily know all of those anomalies. You may have had an incident. You may have had a retirement, which caused incredible expenses that you didn't anticipate. You know how your operation operated. Please just advise us of what happened, but you will do that best if you stay calm and you stay collected. Again, remain composed and calm. You know your model better than we do. Just articulate your message. Please do not be intimidated. You will also receive in your budget hearing a rate resolution. That rate resolution looks like this document. It is a resolution that must be passed by your legislative authority. It sets your tax rate for the following year. And that rate resolution must be adopted by your legislative authority and returned to us by October 1. If for some reason you have an item on the November ballot, you will receive an amended rate resolution as long as the money that is passed in the November ballot affects that particular rate at that time. If you're renewing early, you won't get an amended rate resolution. If you're renewing on time, you will get an amended rate resolution. Most importantly to note is we cannot send your rates into the state by law until after the Board of Elections certifies the results of an election. So if you're anticipating revenue from something that's on the ballot, it behooves you to get that amended rate resolution in as soon as possible so that we can get your rates down to the state and get certified first by the Board of Elections and then get your rates down to the state so you can start collecting in January. Okay, the actual hearing. These are what you should anticipate having to accomplish. One is be able to justify any cash carryover. I use the rule of 40% is typical, 25% is minimum. I have changed my philosophy recently to go to 40%. I used to believe the minimum of 25% was probably typical. I believe that's probably not the case. My decision to change to a 40% as being typical is derived from certain entities that are permitted to have a certain percent carryover as a normal course as defined by statute. I don't think those entities are any different than local governments, and therefore if it's good for them, it should be good for you. But again, that's my personal opinion. I'm not going to get too excited unless your typical carryover exceeds your expenditures by more than 40%. If it does exceed by 40%, I'm going to ask you for logical reasons why that happened. Your reasons may include something of, hey, we're going to buy 2 vehicles and we don't have a reserve fund, and so I need to save the money for the 2 vehicles. You may be doing a new roof on a building, and that's where you're putting the money. Whatever those reasons are, again, come prepared to justify why your cash carryover is in excess of what we believe is normal or typical. And again, my opinion is 40% is typical, but I'm one of 3 people. Some reasons why you may have for a carryover in excess of 40%. Hey, COVID happened. COVID happened and we either didn't do certain things that would have burned money away, causing carryover to be higher, or we got money that we didn't anticipate getting and we haven't fully spent it yet. Or you canceled or postponed projects. You had unexpected revenue, or as we mentioned earlier, the revenue exceeded the county's estimate. So we told you to use 95, you actually collected 101%. You should be automatically 6% over in your carryover as a result of that revenue. If you have a reserve fund, we are going to ask you at the hearing for documentation. Again, pursuant to 5705.13 and 5705.29, you should have documentation, and your reserve study should be based on an independent study. It shouldn't be just somebody decided sitting around a table on a napkin that this is the amount of money we're going to put in reserves. You should have an independent person look at your dynamics and say, if this reserve money is for building maintenance and repair of capital equipment, this is what our study proved to be the requirement for you to set aside. If you have that independent study, they are far more expert than we are, and there's very little debate. Please note the exception, which is in 5705.29, which governs reserve studies and how we interpret reserve studies. Again, we can ask for documentation, but there are restrictions to what we can use for leverage in monies that are held in reserve. We're going to look at fund assignment verification, and that is, are you using the correct funds to house your money? And we're also going to look at whether your levies, your revenue draws, are from fixed term levies or are they from continuous levies. You should note that if you have continuous levies, excess money will be under more scrutiny than in fixed term levies. And that is because continuous levy never gets before the eyes of the public again. Once it's made continuous, the public doesn't vote a second time, which means the Budget Commission has a duty to look at it. We look at your estimated versus your actual expenditures and balances. And again, do not panic, stay focused. You know your job and your entity better than we do. Know what events caused the variances and calmly explain them in detail. Okay, we're on the home stretch here. Next, we're going to talk a little bit about levies. So a couple things to consider in levies is a qualified levy versus a non-qualified levy and how this is affecting the actions of the Budget Commission. If you are anticipating a levy and you wish to look at either renewing a levy or replacing a levy, if you replace a qualified levy, you cost the taxpayer 12.5% more money. You don't get any more money. The state just doesn't contribute to it in rollback because it's new money. So qualified levies disappeared around 2013. All new money is considered non-qualified, but legacy levies are at an advantage to the taxpayer to the amount of 12.5%. So you get rollback money directly from the state, equaling 12.5% of that levy that the taxpayer did not have to pay. Please keep that in mind in considering whether or not to renew or to replace a qualified levy. If you renew a qualified levy, you retain the rollback. If you replace it, it's renewed with fresh money, which means it loses its qualification. Recognize that there is a temptation to replace qualified levies because they're considered easier to pass than a new levy. But there's a cost to doing that, and that cost is 12.5% to the taxpayer. It doesn't cost you anything, it doesn't hurt you at all, but our job is to also keep in mind the taxpayer's consequences. Continuous versus fixed term levies. As I mentioned earlier, continuous draws more scrutiny from a variety of sources. It draws more scrutiny when it's initially placed on the ballot because it's forever, and it draws more scrutiny in the Budget Commission because once it's passed, we are the last line of defense to make sure you're adequately and properly using that revenue for its intended purpose. Fixed term levies do cost money, though, to renew and do constrain you in your budget. So I think the disadvantage of fixed term levies is that you have to pay to put them on the ballot to continue to renew them. They also prevent you from using that levy money in your long-term budgeting plan because you're not assured that they will pass. Those are prices you pay for fixed term levies, but you need to consider those when deciding whether to fixed term a levy or make them continuous. The other thing to consider in levies is the timing of them on the ballot. So you have to pay the cost of levies being placed on the ballot. A presidential election year is the least costly to you because there's automatically federal elections on the ballot and they share in that cost. So if you're going to put a levy on, the cheapest time to do it is during a presidential election year. If you're in an off election year, those are the most expensive typically. If you're the only one on the ballot in an off election year, you're going to pay 100% of the cost of that levy to be placed on the ballot. You share the election costs with other ballot parties. So keep your eye on what your other entities are doing. If a school has a levy on, a park has a levy on, and maybe mental health has a levy on, and you need to add a levy and it's an off year, you're going to share with them the cost of that election. Let's also look at limitations of levy revenue on your budget. Again, you can only budget a sure thing. Just because a levy is on the ballot does not mean you can put it in your budget. Have a plan so that if the levy fails, you have a fallback position. You can't just say, look, I think it's going to pass, so I'm going to artificially lower my expenditures to accommodate the reduction of revenue. That's going to be tested at the Budget Commission hearing. We're going to ask you for your Plan B. If it sounds like you're just winging it, we may challenge that position. You should have a clear plan. If this levy doesn't pass, we're not going to do this project, and this project, which will free up that revenue to be used to pay for salaries and benefits. Okay, this concludes our formal presentation. We did have a series of questions that came up during the live presentation. We can make those available to you if you ask. If not, I would ask you to reach out to myself or the county prosecutor or our staff and ask your questions. Above all, be calm, be patient. We are trying to help you in the process of coming to the Budget Commission for your annual hearing. Please do not be intimidated. Let's make this a win-win experience and the shortest root canal possible. Thank you very much.